Let's continue our discussion about luxury retail by looking at the stock performance of some popular high-end retailers. Tiffany stock, for example, has more than tripled since the market bottomed on March 9th, 2009. It is up almost 50% this year. Williams-Sonoma, another one, stock has gained 500% since the market low and 74% year to date. Will the sweet spot for luxury retailers continue into the new year? Joining us now, Nagel, retail analyst at Oppenheimer Co. Thanks so much for joining us.
Thanks for having me.
Let's start with Tiffany. Tiffany has really outperformed the jewelry market, and they actually raised prices 3 to 7% this year. What's going on there?
Well, it's multifaceted. You mentioned, first off, I think the move in the stock largely reflects how low it got. And if you go back to the depths of the recession, the depths of the financial crisis, a lot of these names, even really high-quality names like Tiffany, were viewed as potential bankruptcy candidates. And as ridiculous as that sounds now. So I think that it's as far as the stock goes, it's somewhat a function of where we're
Tiffany had to go get money from Warren Buffett, right?
Not that I know of.
Tiffany definitely had to go get money from Warren Buffett. Okay. $250 million. He got a good deal on it.
Okay.
Break it down for us. I mean, Tiffany's got a range of products.
Right.
Is it the high-end stuff that's doing really well, or is it the lower-end, cheaper silver stuff that's doing well?
Lately, it's been more the high-end. You know, so if you look at the product, you can buy something for a couple $100s. You can buy something for hundreds of thousands of dollars. The best performing area for them has been kind of that higher upper end. And we've seen this lately, and I think what we're going to see when we get the final report through the holidays is that we're actually seeing more strength now in the low end as well. Because I think that consumer, it's still a pretty well-off consumer, is now coming back. There's a reason for them to be spending through the holidays, and I think that's what's happening right now in their stores.
You know, we saw in 2009 some people putting off getting married, putting off engagements. Did that change in 2010? Is this because people are buying engagement rings?
Engagement rings, I think, have been pretty steady. I think it's more the gift giving has been what's changed.
All right, I've got a lot of marriage invitations in my inbox, so.
Let's talk about gift giving. Williams-Sonoma, it's incredible. I had to run the numbers myself just to see if it was true. It has soared. Why has that stock done so well? Is it just the right area, target clients?
That's it. I mean, and I'll make the same comment with what I made with Tiffany, is that it's where it's come from. Another name that was chalked up to go out of business. But I think where Williams-Sonoma is really benefiting now is it's focused on the high-end consumer, so the consumer that in this recovery has recovered first. They're also benefiting, particularly on the Pottery Barn side, from a lot less competition. You know, through the economic downturn, one of my themes in my retail universe has been which names survived and which are then positioned to benefit from those who went out of business. And Williams-Sonoma is really well positioned there.
Has it brought its competitors? I don't even know Williams-Sonoma competitors, but surely there are other cooking specialized stores out there. Has it brought them up with it? Have they all done well?
Yeah, I mean the overall category has done well, and there's not that many targeted kitchen stores that compete directly with Williams-Sonoma. I'm thinking more on the Pottery Barn side, which is the other big side of their business. That competes with companies such as Crate and Barrel. But then also a lot of that gone out, like I said, a lot of that gone out of business.
So are we going to see these high-end consumers continuing to buy into the beginning of the year and throughout next year?
I think so. I think so, and I think of course there's a seasonal slowdown, January, February, after people have done their holiday spending. But I think the overall trend is still moving higher.
What about not so high-end stores, Home Depot and Lowe's? I know I spend a lot of time there. Their stock has gone up as well.
Just recently, we had a nice bounce in both Home Depot and Lowe's in the last month or so. What drove that Lowe's announcement was very encouraging. They came out at their analyst meeting a couple weeks ago and said they're further slowing growth. They're buying back a lot of stock, $22 billion in stock over the next 5 years. And then following that, Home Depot had their analyst meeting a week later and said demand has started to pick up. So as I look into 2011, I think this home improvement category is really one of the most interesting areas, because unlike those other names, they've lagged. But as I look at the world, I think housing is getting better. I think demand for housing products is getting better, and they're going to benefit in 2011 because they lag and because you see better demand dynamics.
All right, thanks so much, Brian. Nagel, a lot of factors at play in the retail sector here.